So this is what we have. Regional banks are falling. Major U.S. iconic companies are in pain. And gold is near a new lifetime high. What is going on? And is it all connected? Stick around. I'll tell you what it means. Hey everybody, this is RC Peck, and this is my weekly video where I look at what I think matters most. Now, everything about this video is to retire strong. In order to retire strong, you got to make sure you don't get those 50% losses in your portfolio. They are devastating. And you have to make sure your portfolio grows strongly, stably, I know I'm making these words up, in those long bull markets, which means you have to eliminate what we call downside replication. It's everything we do in a portfolio x-ray, but that's what this week's video and every week's video is about, is to make sure your money is safe, is stable, and growing. So there's three parts of the market I want to look at. I want to do that right now. So we're going to jump over to the price charts. Okay, so let me do that. So the first price chart, that's not the first price chart. This is the first price chart I want to look at. This is a price chart of the monthly close of gold in US dollars. Now, I'm just showing you the last 3.5 years. But if you look where my blue line is, that's the old monthly closing. So it happened in July. That's right, July of 2020. Last month, gold closed at its highest closing price ever. Now, it could have been the highest weekly close ever, but gold was about 0.1% below its highest weekly close ever. That comes out to $1.60 below its highest weekly close ever. So gold is picking up some momentum. It is looking to figure out how to get above all of these highs, and it's just checking them off, right? So if I zoom out, you can see what I'm talking about. I'm still on a monthly price chart, but I've zoomed way out to about 13.5 years. Here's the old monthly closing high right there. And you can see over the last 3 years, very sidewaysy, right? I'm looking over here right now. Definitely a very sideways, frustrating market. And it all happened basically above monthly closing highs from 2011 and 2012. So gold is definitely picking up momentum. Now, here's the thing. Central banks are buying gold again. Last year, they were the biggest buyers of gold in, let me figure this out, about 70 years. 70 years. That's almost 3/4 of a century. So something is going on. And I think a lot of it has to do with the war in Ukraine, Russia, China, too many central banks owning the US dollar, too many central banks owning US treasuries, and they want to diversify out of the dollar. How do you do that? You buy gold, and that's what we're seeing here. So it's a non-trivial event to see gold up at almost, well, I'll tell you what it actually closed at, $2,026. So that's where we have gold right now. And I've studied gold for about 20 plus years. And what I could tell you is, and what I notice is when people's change of concern of the future increases, so the increase of concern moves up, gold moves up. If it doesn't, meaning if they're just concerned, but they're not concerned more, gold doesn't really move. So people's concern about the future collectively is starting to increase. And that's why we see gold at its highest monthly close ever, highest monthly close ever, and highest quarterly close ever. And possibly next week, its highest weekly close, if not also its highest daily close. Wow, that's like a mouth salad of just a lot of stuff. Okay, let me keep going here. So that was one thing I wanted to show. Now, this is regional banks in the US, KRE, and it does not look good. I've talked about it. Part of me wants to stop talking about it, but it's not looking good. It is below its pre-COVID high, which I'm pointing out on the screen now, and it hasn't recovered. Yes, the overall market is moving higher. It has moved higher, but regional banks are not moving higher. And that is a concern because they're getting a lot of attention. They're getting a lot of money. The problem is, and here it is, people have discovered money markets again that pay 4% or 4.5%, and deposits aren't paying anything. It is very, very easy to move money into a money market, and people are now starting to discover that. That means the deposits are going to be dropping on small regional banks, which means they're going to have a harder time to give loans out. They're going to contract or constrict the credit they have because they don't have visibility in their deposits. And that's what we're seeing right here. So the knock-on effect is all these banks are going to be lending out less. Now there's another knock-on effect, and here's Schwab, a price chart of Schwab right here. It does not look good. Now this is not a regional bank, right? Schwab does have a bank, and it's one of the largest banks in the US, but Schwab's really known for its brokerage services. And it's not looking good right now. It is sitting right on its pre-COVID high. So if you're a trader, you really want to see the price stop falling here. But Schwab is getting pulled into really this whole duration and hold to maturity conversation. And if you don't know what I mean, you can read my weekly email, which I usually explain more of what we're looking at in these videos. But what we have here is people kind of voting that something might be wrong with Schwab. Now, I don't think the brokerage is in any dire straits. I think anyone who has the money there is fine. I use Schwab as my brokerage. It's my custody for my clients' money. It's one of the largest custodians. I knew I'm going to get it. My brain's really not working that well today. So it's not going anywhere. I mean, this is truly a company that is too big to fail. But what we have is things moving, not just one thing moving, right? Before it was just, gold's moving up. No one's really talking about it. It's just gold. Gold is for old people, blah, blah, blah. But now it's near lifetime highs, right? So something is going on. Gold is telling us, maybe inflation is going to stick around a lot more. Maybe it's not going to get back to 2%. Maybe it's going to stay to 4%, right? Maybe the Fed is not going to be able to get it down. All of a sudden we have 4% inflation. So that means there's a lot of people concerned about the future. We have regional banks still weak. They have not bottomed yet. I've even seen regional banks with a lot of insider buying, and those banks haven't bottomed either. So people are still selling and getting out of regional banks. This is not good news because regional banks do a lot of the lending. And if you watched my videos, you know that I think commercial real estate is the next shoe to drop. And a lot of the lenders for that sector industry are regional banks. So we've got that coming. I've talked about Blackstone and how their B-REIT, they're gating a lot of the money people want back. So there are things happening below the surface, and I'm just simply pointing out to 3 things this week. 1, gold making close to a new lifetime high in US dollars. And I keep saying US dollars because it is already at lifetime highs in other major currencies. Regional banks have not bottomed, and Schwab is getting pulled into this too. And by the way, it's not just Schwab. B of A doesn't look good. They have a lot of losses in their hold to maturity account too. In fact, they're one of the biggest. So things are happening, but right now the market is just going sideways. This all comes down to you want to have a strategy that can adapt to what is going on in the market. And that's, a lot of people don't have that. What most people have is a strategy that cares about the year they were born or how they answered some risk questions on a Tuesday many years ago. And I think that's a problem. So let me know where you think I got it right, where you think I got it wrong. Like, subscribe, leave a comment. All of those things help with getting this video out to more people. I appreciate you being in my world. And if you are curious about how your portfolio is doing and you want to see if there's a way to eliminate what I call downside replication, go ahead and you can get on our schedule. Thanks for being in my world. I appreciate you, and I'll see you next week. Okay, bye.